Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Tuesday, July 18th, 2006. I've got the Nasdaq 100 Trust up on the screen right now, looking at a daily chart. We can see a nice pickup in volume here today. And while the Q's only traded up with a gain of 12 cents today, the intraday reversal was pretty impressive. I had posted a video at about 1:30 Eastern Time questioning whether this bear could bounce or not. And apparently this bear can bounce. Let's see if it can land a little bit more gracefully than the bear in that other video. But we're starting to see a little bit more reason to think that perhaps we can get a little bit more sustained rally in here. First of all, I've got this MACD divergence that I'm looking at on an hourly time frame for the Qs. We can see that the MACD made higher lows while the NASDAQ composite, or not the composite, but the NASDAQ 100 Trust, the QQQQ, made these lower lows in here. What that typically means is the emotional intensity level of the selling on this leg lower was less than the emotion on this leg. And I think that's probably, besides what we're seeing on the chart here, I think that's probably what we're seeing just generally, because as the Mideast tensions seem to start to dissipate a little bit, and we've got Bernanke speaking tomorrow. A lot of people expecting that he's going to want to come out looking nice, looking good there. So maybe buying ahead of that. And again, today we've got a lot of earnings. We've got Yahoo after the close. We've got a lot of big earnings coming up. So it's still going to be a stock picking environment. While the market looks like it could continue to bounce a little bit in here, perhaps in particular if it takes out these recent levels up near about $36.40, these highs in here, then I think we could see, and that's actually about 36.30. Above that, I think we could see this market get going a little bit better. What I'd really like to see would be a little bit of a shakeout tomorrow towards about $36 a share, and then for it to rally higher. And in that case, we might be able to see a rally up towards this 37 or a little bit higher than $37 level. So the market seemed to be getting a little bit of support from the oil market today. The oil had another hard day down. This morning it gapped up, and I don't know if you guys watched CNBC, but I thought it was absolutely hilarious to see that Liz Clayman down on the floor of the New York Mercantile Exchange running up to every trader, asking them every 10 seconds that we saw a 5-cent move in oil, what caused that? What caused that? It was pretty good comedy, I thought. But the point is that we've got a short-term downtrend in oil, and that's probably lending a little bit of support to the market as the Middle East tensions maybe are simmering down a little bit. Gold also is getting hit in here. Might have traced out a little head and shoulders top in here. And if that's the case, then that would give us a target. The height of this pattern is about 66.5 down to 64, let's just call it. So about $2.50 lower, giving us a target maybe of about 61.5 to $62 an ounce, or a unit here in the GLD, the Street Tracks Gold Trust, which is meant to represent mimic the movement in gold, 1/10 of an ounce of gold, basically. So let's go ahead and take a look at the spiders now. The SPY also came down, made this lower low in here on the 10-minute time frame, and on the daily time frame, we didn't see it break below the lows from June. However, it did take out Monday's low, or I'm sorry, last Friday's low, and we're seeing the same thing here on an hourly time frame where we see the market making lower lows rather, with the MACD making higher lows. So we've got a divergence there as well. Now the similar type of area of resistance is going to be about 124.10. So hopefully we can see the market run up to about 124 tomorrow, 124.10, then pull back maybe to 123.60, 123.70, and then break out. And maybe we can get a rally up towards about the 126 level. That's what I would be anticipating, hopefully, to happen in the spiders. The IWM, the Russell 2000 shares, looking a little bit more constructive even, and it tends to a lot of times look more constructive than the S&P. We've got another divergence in here. So all these divergences are showing that perhaps we've seen a little bit of a shakeout in the market, and while we're still in a severe bear market, severe decline, perhaps we're going to get a bounce in here that leads to something. But again, as funny as that little bear video is and how he fell flat on his face, that's the way all of the rallies have panned out so far in this bear market. So, while we might get it to bounce good for a couple days, typically these bear market rallies are going to fail. However, it can provide us with a little bit of upside opportunity. Meanwhile, Checkpoint, or Chesapeake rather, Chesapeake Energy, we had an open position in this stock, and I suggested a stop of 29.34. The stock gapped up, took us out of that today. So the stock still looks very bearish, but I'm not going to update that one for now. MGPI had suggested a stop at break even, and we got stopped out of that one today at break even as well on that MGPI. CYBS. This one I had suggested that we buy CyberSource above $11.10, so you should have bought it in there. Then I had said that your stop, worst case stop, should go at 1076. Today's low was actually 1077, so that stock is still alive. If you look at my earlier post, someone had questioned how to buy the stock, and I said that I did buy it. What I ended up doing was buying it on the pullback right in here. I bought it at 1106, actually, right in this pullback area, and I had set my stop under there, and that's where I got out of the stock. However, it did hold above the original stop that I had suggested, which was 1076. So if you're still in it, I would say now you could, I would put your stop up just slightly higher to about this level here, which is 1084, just to bring it up a little bit. FSII, Frank Sam Indian. This stock I had suggested buying above $6.19. It did that. It was looking good for a little bit. It broke that back down and violated the stop at 601. So that was stopped out with a small loss. SMDI, Sam, Mary, David, Indian, Sirenza Microdevices. This stock, I had suggested that we buy it above $8.20. It failed to get above that level. It didn't show the strength we were looking for. So I'm going to take that one off the list for now. I'm not as confident about it because it's this close, because this 5-day moving average got a lot closer to it, and I don't think it gives us enough short-term upside potential to justify a trade. ESRX, Express Scripts. Here was a short side suggestion in this stock, and I was suggesting that we sell it short between $70.60 to $70.70. We did have the opportunity to do that this morning with a stop at 71.02. Now the stock, I had suggested our initial target was 69.50, so hopefully you covered part of it down there. Otherwise, you should have been trailing your stop down and gotten out right in here, in particular when you see the market rallying as hard as it was this afternoon. If you're still in this thing, I would give it about 2 cents stop. I wouldn't really, I would cover this. I would take your 50 cents, whatever's left in it in terms of profit, and move on. So I'm not going to continue to update ESRX. Royal Gold, RGLD, was also suggested as a short sale candidate, and we were looking for a slight rally in this stock. We did get the initial strength that we were looking for right up in here, and then the stock started to break down, and that's where it should have been sold short. Right now, if you're, again, don't listen, don't rely on these stops from yesterday's close. Look at the definition of a downtrend and at least lock in part of your gains when you get, in this case, about a 50, 60 cent profit. Lock in those gains. Now the market's making these higher highs and higher lows on the short-term time frame. If you're still short this stock, get out at a break even. Otherwise, I'd say stick with it. But you should be out right now. Look at this, look at how it rallied, and there's no reason to be holding it. Yeah, like I said yesterday, this environment, unless you're trading options, I think it's best for day trades in particular. What we're looking for in microchip, symbol MCHP, was a short sale below $32.78. We saw that occur right here. At that point, our stop should have been 33.02, and we can see that 33.02 wasn't hit today. And again, if you're still in this stock, I would have even covered it right there. If you're still in the stock, keep your stop at 33.02, so your risk is about 30 cents total. Market is showing a little bit of signs of firming up in here. Let's just take a real quick look at a tick chart of Yahoo and see if their earnings have come out and what that might be doing. I'm not sure that they're out yet. We've got a little bit of action after the close, and the stock is trading at 32.35. I don't know if the earnings are out yet. It doesn't look like they probably are. But let's see what tomorrow brings. And thanks for your time. Have a great evening. I'll be back with another video this later on tonight. Thanks.